Hello YouTube friends, and welcome to Grow Money Seeds, a channel about building wealth and managing your money. This is the final video of a 5-part series on technical indicators. In this video, we're going to take what we have learned about moving averages, the RSI and the MACD indicator, and use them all together to get an overview of the current market condition. Right, let's talk about this. Okay, before I start, I want to mention again one of the most important rules when trading. The rule is to always trade with the trend. It is far easier to make money in a trend than to try and predict a market top or bottom. In a previous video, we had shown that approximately 80% of individual stocks move in the same direction as the overall market. Therefore, it's imperative to understand the current market or sector condition before placing a trade. For example, if the current market condition is bullish, then it may be a better idea to go long, and if it's bearish, then you may want to go short. So, how do we know what the current market condition is? To determine this, we're going to use our 3 indicators with charting software. For this video, I'm going to use the charts in Thinkorswim. First, click on the Chart tab in Thinkorswim to set up the chart. Click on the cog icon, and under the General tab, make sure that the overlap volume is checked. This will move the volume of shares traded onto the main chart, which frees up some space on the screen. Next, click on the Time Axis tab and have the expansion area set to 20 bars to the right. This opens up some space on the right of the chart and helps visually when looking at a chart. Finally, under the Equities tab, make sure you have Show Extended Hours Trading selected. This means the chart will display prices of the stock outside of normal trading hours on smaller time frames. Then click Apply. We are now going to add our moving averages. Click on the beaker icon and under Studies, search for the word exponential. Add 2 of these by double-clicking on the indicator. Click on one of the cog icons and change the length to 5 and make sure the color is green. Then click OK. Click on the next cog icon and change the length to 15 and select the color as red and then click OK and OK. If the 5 EMA is above the 15 EMA, then the short-term trend is bullish, and if the 5 EMA is below the 15 EMA, then the short-term trend is bearish. Next, let's add the RSI. Click on the beaker icon and again under the study search for RSI and double click. Click on the cog and change the overbought setting to 50 and the oversold to 50. Click OK and OK. I use the RSI to look for momentum. So if the RSI is over 50, I consider this bullish momentum, and if it's below 50, then it's bearish momentum. Next, add the MACD. Go back to the beaker icon and under Studies, search for MACD and double click. Click on the cog and select Yes for the option to show breakout signals, then click OK and OK. There are 2 things I look for with this indicator. If the last MACD signal shows a green up arrow, then this is bullish, and if the MACD line is above the 0 line, then this is also a bullish sign. Conversely, if the last signal is a red down arrow, then this is bearish, and if the MACD line is below the 0 line, then this is also bearish. What I like to do now is to compile a daily spreadsheet to display this information like a heat map. Let's enter the previous day signals. The 5 EMA is above the 15 EMA, so it's a buy signal. The RSI is above 50, so the momentum is up, and this is also a buy signal. The MACD signal is down, so this is also a sell signal. Finally, the MACD line is above the 0 line, so this is a buy signal. If all 4 indicators are a buy, then I consider this a strong bull. If 3 of the 4 indicators are a buy, then this is a weak bull. If 2 of the 4 indicators are a buy, then the market is neutral. If 3 of the 4 indicators are a sell, then the market is a weak bear. And finally, if all the signals are a sell, then this is a strong bear. The heat map cannot predict the future movement of the stock market, but it does give an idea of the current market condition. Generally, the market condition or momentum does not change overnight. So, if the market is bullish, I will be inclined to open new long positions. If the market momentum is bearish, I may want to open new short positions or protect or hedge a portfolio. Sometimes, even just waiting on the sidelines until the momentum shifts back towards being bullish again is an option. A contrarian view might be to wait for a sustained bearish run and then get ready to go long, or wait for a sustained bullish run and then get ready to go short. Let's look at the history of a daily chart that displays these indicators on a chart and see what would happen if we had placed some trades. I want to first talk about the recent sell-off during the coronavirus pandemic. If we zoom in, we can see that on the 24th of February 2020, these indicators quickly turned bearish. This strong bear phase of the market lasted from about the 24th of February to the 7th of April. Just after this was the first time a slightly bullish signal was confirmed. If we had just jumped into a long trade during this downtrend and did not know that the current market condition was still bearish, we would have continually lost money during this period. During this period, it would have been best to exit losing long positions and open new short positions or hedge. Only once the indicator signaled a return to being bullish again could we have gone back to opening new long positions. Zooming out and looking at a longer time frame of a 3-year chart, can you begin to see there are bullish and bearish periods in the market? Learning to use these indicators and understanding the current market conditions will allow you to plan and trade with the trend, which will hopefully improve your trading success. Right, so that brings us to the end of our video on technical indicators and how they're used. If there are any other indicators that you would like me to discuss on this channel, then please leave a comment in the comment section below. If you found this series of videos useful, then please don't forget to click the subscribe and the like buttons. This will be greatly appreciated and helps to support my channel, and you'll also be notified when the next video is released. Thanks for watching, and I'll see you in the next video.